We're 1 week into 2026, and we're going to check on our stock picks for the year to see how they're doing. What I have on the spreadsheet is a hypothetical situation that if at the start of the year in 2026, if you had bought $100,000 of the S&P 500, if you bought $100,000 of VU, what happened was you bought them at $631 per share. They are currently worth $634, and so that means that before market open for January 1st, 2026, you will have bought 158.5 shares of VU. They are now currently worth $100,485, meaning that you've made $484.94, a 0.5% increase on your money. Not too bad for just being 1 week into the year. So let's check on our 8 stock picks for 2026. If you want to check out those picks and a detailed breakdown of those companies, I will link that in the description below. But what I have here is the 8 companies that we invested in. And the first way that we're going to look at this is what if we equally invested into each of those companies? So what if we took a hypothetical $100,000 and put $12,500 into each company? Well, that's what I've done in the spreadsheet. The buy price is listed here. So we would have bought Amazon for $231, Meta for $663, MU for $228. And this is how many shares we would have purchased, and we would see the value now of those companies. So we put 12,500 into each. What would that be worth right now? And you can see of the 8 companies that we invested in, only 3 are down, and those 3 are not the small cap risky plays. We have Meta, we have NVDA, and we have Johnson & Johnson. And so you can see our profit and loss here is mostly green. Had we invested $100,000 into those companies, they would now be worth $103,729. That's a 3.7% increase. That is a huge outperformance so far on the market. Now, of course, this is not investment advice. We're not saying to buy these 8 companies. We're not telling you to sell any of them or hold any of them necessarily. We're just showing that the inner flame method seems to be working. It's worked for the past 10 years, and it's still currently working in 2026. If market conditions start to get a little bumpy and rocky, if we experience a long-term bear market, then we'll see what happens to these companies. We'll see what happens to this portfolio. But so far in 2026, things seem to be going well. Now let's look at another situation. What if we had bought based on market cap? So what if we put more money into the large companies? So obviously companies like NVIDIA, Amazon, Meta, they would get most of the money. And smaller companies like A.O. Smith and Excelixis, they would get less than 1%. What if we had done that with our hypothetical $100,000 into these 8 companies? Well, we'd still be beating the market. We would be doubling the market, as a matter of fact. We would have made $937.87 in profit. That's a 0.9% gain. So even in that strategy, in that allocation, we beat in the market. And finally, what would it look like if we use the inner flame weighting system that we have on this channel? So back in that video, we came up with weights, we came up with allocations based on the inner flame finance scoring system and the intrinsic value. And so in that video, we found that Amazon would deserve 5%, Meta 3%, MU 14%, NVIDIA 16%, etc. And you can see that if we use the inner flame finance weighting based on our scoring system and intrinsic value, you see that we're up 3.6% just in the first week of 2026. So we are by far outbeating the market by quite a bit. So if you like beating the market, drop a like on this video, subscribe to this channel to keep coming back to see how inner flame finance works, how we think about investing, how we score stocks, how we look at value and dividend investing, how we look at growth companies. Lots of information in these videos for you to learn from. These videos are made for entertainment and educational purposes only, not financial advice. I appreciate you watching. Tell everybody about this channel, spread the good word of the inner flame finance methodology, and we'll see you in the next video.